Well, if they're waiting for a market rebound, they better plan on waiting for 18 months. And again, that could be longer. We had a Prime Minister, Justin Trudeau, who was the most ridiculous individual on most policies you could ever imagine. 30 years ago, the average first-time homebuyer was 27, and today they're 40. It's just terrible. Mark Carney desperately does not want to raise rates. I know that Tiff Macklin doesn't want to raise rates. The Canadians are going to hold off as long as they possibly can if the U.S. increases.
Where is inflation headed? Where are interest rates headed? And where are mortgage rates headed? And ultimately, how will housing markets be impacted? Should you be buying a home now or selling? If you're a buyer, should you buy now or wait? If you're a seller, should you sell now or wait for a bit of a rebound? Well, we're going to get the answers to all of these questions and much more with Ron Butler, host of the Angry Mortgage podcast and principal mortgage broker at Butler Mortgage. We're also going to get his take on Canada's plan to buy out developers underwater in British Columbia. A historical move, a historical announcement. What's next? How should Canadian taxpayers feel about this? And right now, there's a trade on Cauchy, the largest prediction market in the United States, on how high the 30-year mortgage will get this year. So traders are predicting that there's a 64% chance that it will get above 6.7% by the end of the year. So if you do place a $50 trade on this particular outcome, you may yield or get a payout of $96 if you turn out to be correct, and the 30-year does land above 6.7% by the end of this year. Ron's going to answer this question and give us his forecast on the direction of mortgage rates. So stay tuned for this interview. This video is brought to you by Cauchy. It's the largest prediction market in the US. And like a sportsbook, you're trading peer-to-peer on real-world events, from economic data to political outcomes, and the price moves based on public opinion, not a house. Go to the link in the description down below or scan the QR code here to get started. And new users who use my code LIN, L-I-N, can get $10 when you deposit $10. Ron, welcome back to the show. Good to see you again.
It's happy summer. Yeah, it's finally warm in Canada.
It's finally warm all over. I'm getting heat wave warnings from the European guests on my show. Is it a happy summer for the real estate market, though? Take a look at this particular piece of news. Dropping this week, weekly mortgage demand drops as rates remain stuck in a narrow range. This is according to a CNBC article. The average contract interest rate for a 30-year fixed-rate mortgage with conforming loan balances $832,000 or less increased to 6.58% from 6.57% last week. Not a huge jump, but the trend is upwards, Ron. Now, if this trend continues to go upwards, what effects will this have on the mortgage market and the housing markets overall?
I think we're already seeing the effect. I think that once the 6% plateau was crossed, you can just watch it wilt. That's the reality of this. It is very hard in a marketplace where we have some homes that have, we've tracked the 10-year numbers. So this is one of the highest, I think the highest price point on average in the U.S. today, combined with a 6% plus rate. Yeah, it's not good news, and it's going to be felt. It's going to be felt, and it continue to be felt. This is not a pro housing environment we're in today.
So, according to prediction markets, this is Cauchy on my screen. How high will 30-year mortgage rates get? Let's talk about the direction of rates first. So, traders are predicting a 64% chance that it'll end the year above 6.7%. We're already on the way there. So, Ron, once it gets above 6.7%, actually, you know what? Let's talk about the direction first. What factors are you looking for that will drive the mortgage rate? I know that rates all follow the 10-year, which kind of follows the Fed and central bank policies. But more or less, based on conversations I've had with you and other people in the real estate business, rates follow demand and supply more than they follow the central bank policy rate. Is that true?
It is true. That naturally, there has to be some kind of inflationary relationship to the Fed. It's unavoidable, but yeah, you're right. It's a supply and demand issue.
Based on that assessment, then, do you think rates will continue to go up for the remainder of the year?
Sure. I think that there are so many different factors. So we could list them off over a long haul, but there are a lot of different factors that just don't support any softening of the rate position. I mean, there's nothing you could point at that say, yes, this will definitely move rates down. They are absent. There was some opportunity when it looked like the war might be over in the Middle East, but it's not, clearly. That continues to oppress all kinds of different countries throughout the world, not necessarily the US, but other countries. And it's not, the US doesn't exist in a vacuum. I mean, there is an impact throughout the world when you have this sort of inflation percolating everywhere.
The weakness in the condo markets, which we'll talk about in more detail, is that a zero-sum game in the real estate market, such that if we have weakness in one housing sector, like the condo market, for example, we're going to see strength in, let's say, single-family homes, for example? Is there capital rotation out into one, from one thing into another?
Yeah, I mean, but it's also so regional. Like if you start to look at this scenario, it's so regional. For once, Northeast doing well, Southwest, South in general, just like some of the stuff in Florida is like some regions in Florida, it's just awful. And yes, you can lay that at the feet of the condo situation. Classic problems that oversupply, a combination of oversupply, and then the curious, unsophisticated way of keeping track of whether the condos towers will fall down. I mean, that is definitely something that is coming into play. And you have to say the rotation should go back into single family, but you have the caveat that the prices are so high. This is record high prices for single family through, other than the South and parts of the Southwest, like Nevada's not doing well. But otherwise, these are record high prices.
So I'm trying to think about what the Federal Reserve and the Bank of Canada is trying to do when they raise interest rates. By raising interest rates, assuming mortgage rates will follow, it stands to reason that house prices will correct. Then consumers who own homes may spend less money because they feel less wealthy, through the wealth effect, of course. And so essentially, the Fed and the Bank of Canada are trying to create demand destruction through housing price corrections. Is that fair to assume?
Well, the Bank of Canada won. They got the correction. I mean, it's correction all over the place in Canada. I mean, we've even seen strong markets like Quebec and Alberta, Southern Alberta's were both rolling over to join British Columbia and Ontario. So we've had that happen. I think the big surprise to everyone is that once Kevin Warsh got the job, it doesn't look like he is a dove on rates. That's not anything that he's talked about. And again, wouldn't be the first time a president of the United States got a surprise with an appointment. I think we're experiencing that right now.
The effect on oil or of oil on rates, we've talked about that earlier. You talked about that on my last show. Is it too simplistic a measure to use oil as an indicator of where rates are going to go? Or is that probably just the easiest way to go about it for now? Just
the easiest way. It's not perfect, you're right, but it's just the easiest. I mean, there's absolutely no one in North America would think that if WTI stays over $100 a barrel for a long time, that we're not going to have inflation in North America. I mean, it's just not reasonable to think otherwise.
Right. And so if let's say inflation continues to ramp up, then basically what we're looking at is higher 10-year yield, higher mortgage rates, higher Fed funds rate. Correct?
That's 100% right. 100% correct. I mean, we have a different scenario in Canada. The Canadian economy is weak. The United States economy is fine. I mean, it's not struggling. There's a K-shaped economy, but no one could describe the United States economy as struggling. But Canada definitely struggling. The Bank of Canada governor, Tiff Macklin, absolutely does not want to raise rates. In his heart of hearts, he's talked about it. He's made speeches about it. He endlessly harps on the weakness in the Canadian economy. He clearly doesn't want to raise rates, but inflation could push him there. The U.S. is a slightly different story. You can make some case that there are aspects of the U.S. economy that are slightly overheated. It's really diverging, the situation between the U.S. and Canada.
Let's just try to illustrate the point out of curiosity. Let's overlay the U.S. inflation rate, which is what I have on my screen here, with the U.S. 30-year mortgage rate and a different price scale. I know these are both different lines, different series of the same color. I apologize for color, but here we have pretty much a very close correlation with the 30-year kind of leading inflation in some cases. But regardless, I think your point stands. They do follow one another quite closely. Okay, so with that said then, if basically what we're seeing is if the Iran war doesn't de-escalate, which by the way, looking like the events from last week with Trump at the NATO summit saying, nope, the ceasefire is over. He called them scums, and we're going to continue with whatever they were doing before. So it looks like there's no de-escalation in sight. We're looking at prolonged conflict, prolonged higher oil prices. Is that your base case assumption here?
Yeah, although it is a bit mysterious as to where oil prices will land. If you look at the basic math of what happened in the last closing of the Straits, we should have had a lot closer to $150 a barrel. We never got there, never got close. So it would appear that major countries like the US and China are managing this pricing. I mean, it looks like there may be more oil reserves in China than anybody ever dreamed of. And, there has been a successful control of the price not getting completely out of hand. So with that in mind, it's very hard to predict just how high the price will go. But let's face it, everything over $80, $90 is inflationary, and it just has to be. There's no escape from it.
How do current macroeconomic conditions impact home builders' activity? So are we expected to see, I guess, home builder activity either speed up or decline if, let's say, rates continue to go up and we have a continuously weaker economy?
Well, decline is the only expected answer. There's not really any rationale for a home builder to want to start new projects in a situation with the potential for higher mortgage rates and the potential for higher Fed rates. I mean, they have financing they have to arrange as well. They don't build houses. Even big companies don't build houses just on their own equity, just on their own cash. They need money too. So it's a two-edged sword. They have higher financing costs, and there's less likelihood to sell the product because a mortgage rate at 6.79. Wow, that's not. You need a lot of income to support that kind of mortgage.
Unless the government gives them incentives to build housing, which is part of the government's plan to make housing more affordable.
Yeah, the one thing that none of us can control is a new idea from the government. It is a complete unknown. I'll tell you, in Canada, I made a bet with somebody who suggested, this is 2.5 years ago. No lie, a bet 2.5 years ago. Somebody suggested to me that the government would bail out developers. I said that is never going to happen. That cannot happen because it's the optics, the politics of it is so hellaciously bad. Looks like, I'll just say it straight up, I lost. I lost in Canada. Canada, I'm the loser. The government's bailing out developers.
Let's talk about that for American audiences who haven't followed this story. So Prime Minister Carney has announced in June that he plans to spend upwards of $1.4 billion to buy out BC condo developers who are underwater. Essentially, he's setting a price floor. But let me just read a few paragraphs of the CBC article, that summarizes this. Prime Minister Mark Carney says the provincial and federal governments have done a poor job of explaining their plan to buy unsold vacant condos in BC and turn them into affordable housing. I don't think we've done, myself included, a particularly good job of rolling this out. So Carney and BC Premier David Eby announced the last week saying they would leverage innovative financing tools to turn more than 2,200 vacant condo units into affordable homes. Now, just a bit of recap here. This article was dated June 25th. We're speaking today on July 10th. There has so far been no concrete plans rolled out as to how they're going to convert 2,200 vacant homes into affordable housing and how they're actually going to spend $1.4 billion. It was revealed through some investigations that some of these developers had business ties with Brookfield. The Conservatives tried to probe this, by the way, and the Liberals shelved the Conservatives' request for probing. Anyway, back to your point about the government bailing out condo developers. Why did you think that was never going to happen? Because clearly it's happening.
Sure. Well, I'll tell you the very simple reason why I thought it would never happen. Because nobody has minted as much profits over the last 20 years, and nobody has built more hellaciously bad, despised product than high-rise condo developers in Canada. Like literally everyone hates what they've done in Canada. Like no one likes it. The prices are astronomically too high. The product is hideously bad, terrible layouts, bad finishes, horrible buildings. They're building condo towers without garbage chutes. So you have the pleasure of carrying your garbage downstairs in the elevator. You can't even believe how bad this product is. So they're a despised group, and the idea that any politician would step up and say, I'm going to make a bunch of reasons why it's a good idea to buy their units, their excess unsaleable units from them. I couldn't believe that it would ever happen. But as you said, it is happening. It is indeed happening. That's right.
Yeah, just on the garbage chutes, by the way, I asked them why they don't have garbage chutes. They said they didn't want to attract rats. That was the reason.
So then what happens? Does the owner of the condo walk the garbage out to a concierge for garbage in the lobby? I mean, it's just absolutely ridiculous. But
okay.
The reality is that there are going to be some condos bought someday. I mean, this was such a communications disaster for the Prime Minister. Many of his advisors off the record said this is the biggest mistake the Prime Minister ever has made in communications. And it was also the fault of the BC government, who said they had a wonderful program in place and got him to join the announcement. And once he made it and realized what a disaster it was the most universally panned and disliked program that's ever been suggested so far in his term. He sort of pointed the finger at the BC government and walked away. The BC government, in turn, has wisely tried to play it down and not going to talk about what's going to happen, just say it's going to happen in the future. Although Premier Eby did say, well, if these condos are below construction cost, then it just makes sense to buy them. I mean, because we're able to quickly acquire affordable housing for the BC residents. This whole idea is ridiculous because there's no accounting as to whether they're below cost. And the fundamental concept of capitalism and free enterprise is that if you make mistakes in your business practice, severe mistakes, horrible mistakes, that you should pay the price. Your company should go into receivership. That the assets then should be auctioned off to the highest bidder, but the lowest price. And when government steps in, that entire process is derailed. So that's the reason you don't do it.
Let me just play devil's advocate here. In a capitalist system, the government is just another actor. You could argue that if nobody wants to buy these condos at the current market value, but the government, being just another actor, believes it to be fair value based on whatever assessment that they have, then they have every right to just go in and buy whatever they want, just like how I have every right to go in and buy whatever I want at any price that I can afford. And they can do whatever they want with it, convert it to affordable housing, rent it out, whatever the case may be, right? So from an optics point of view, it doesn't look great, but from a capitalist point of view, I don't see anything wrong with what they're doing. Can you refute what I just said?
Sure. The only issue that I have with that is that the government never acts as a fair player in these events. There is only one way to find out if this is the lowest price. Put them into receivership, the receiver auctions them off. That's the only way. There is no other way. The point about the government just being another actor, the trouble is the government is acting with our tax money. The government is not a mythical creature that creates its own value. Sure. It just spends our money, your money, my money, everybody who lives in Canada's tax money. So the idea that they can somehow have some kind of perfect knowledge of what a low price is ridiculous. A low price is an auction. That's a low price.
What about Carney's argument that if developers go under, it could have major ramifications for the local economy, kill jobs, and kill growth in that particular city, in this case, Vancouver?
There is no question that even if they buy all 2,200 of these units in the next 3 weeks, that there will be no new condo projects started in Vancouver this year or next year or likely the year after. So the idea of job creation is 100% false. And just to finish off this concept, I'm so old, I was around for the 1990 bust in real estate in Ontario, British Columbia. And multiple companies went down. Multiple development companies went down. They went to bankruptcy. Their assets were auctioned off. Within 10 years, everybody was back at it. I mean, there's one true thing about building homes. If you have people who want to buy the homes, you can build them, you can sell them, and suddenly new companies spring to life. It's not like this isn't SpaceX. These developers. It's not like a unique technology company. Everybody can learn how to pour concrete, and the workers are ready to go as soon as you get a project approved. So the idea that there's going to be a lot of jobs lost, not true. Well, jobs have already been lost. There's going to be no new condos built no new condos are going to start in either Toronto or Vancouver for the next year or two. Or if there are any, it's going to be on an incredibly limited basis. So it's just a bailout. It's nothing else.
What do you think is going to happen with this bailout? Because like I said, as of July 10th, nothing's been done yet.
I think it's just going to quietly proceed. It's going to proceed out of the limelight. It's going to proceed in a kind of a quiet fashion. They're going to take a breather for months, and then they're just going to gradually start. I'm quite sure. I'm sure these condos are going to be bought.
How would that work? How does affordable housing? What does that mean in this context here? Because most of these units, a lot of them are, like you said, new luxury towers that are just unaffordable for a lot of people, but now their government's buying them out to make them affordable. How does that work?
The government's already made that part clear. That's the only part they've made clear, that there would be no purchases of condos in the high-priced regions of Vancouver proper or Burnaby or any of the high-priced locations. They would go out into the Fraser Valley, find low-cost condos that were much lower prices than the luxury condos, and they would purchase those. It's only 2,200 units. It's not an astronomical amount of properties. But they've made it quite clear there will be no luxury units purchased at all. Dave Eby came out with that statement over a week ago. Although how it's going to be run, some kind of weird rent-to-own program that nobody can explain, that's unknown. But the discussion of absolutely no condos other than the far reaches of the Fraser Valley, that's been already decided.
Would you rather, as a taxpayer, if you had to choose between one of the two, would you rather have this program or the program which is that the governments buy towers in the Fraser Valley, converts them to affordable housing units, or force developers through regulation to have 20% of a new luxury condo tower be social housing?
Well, 20% of a new condo tower being social housing just means separate entrances. I mean, this is a concept that's been going strong in a number of cities, particularly in Toronto. That concept has existed for years. They just have a separate entrance for the poors, and the people in the expensive units, they just get on separate elevators. That's been around for a while now. So which one is the best? The best is to keep letting the price of homes fall so that it becomes affordable for more and more people. That is the best program, without a doubt.
If there's a lot of demand for that area, though, then the people who can't afford homes will just continuously get priced out, I think is the argument, right? And so there has to be a subsidized sector of the housing market is the argument. Because if we're talking about an area like Vancouver or Toronto that has a lot of demand from foreign investors as well, then if prices drop, immediately they're going to get picked up.
If prices drop to a point where the rents on those units would make sense to an investor, then yes, that would happen. Right now, we're seeing prices being sold off to family offices and other types of investors at 50% off. At 50% off, they're in they're extremely marked down. There are condos being sold wholesale right now in Toronto today. There's groups that have formed, vulture funds have formed to buy them up. But the idea of the government joining in, I don't think that makes much sense. In terms of affordable homes, they created Build Canada Homes just to do that, just to provide affordable housing. There's billions and billions that are coming down the pipeline to spend on affordable homes out of Build Canada. So the next consideration is Canada's population is shrinking. We may discover that there's a whole new vista of affordability questions. Maybe affordability will not be the same question if we keep zero population growth and we all have a ton of rental product coming on stream. And finally, that there's excess capacity in the condo market. We may be on the verge of discovering things that are entirely different than we experienced for the last 17 years.
Mm-hmm. So perhaps larger homes are making a comeback. Take a look at this story here. This is from the Toronto Regional Real Estate Board. As of July 3rd, which was last week, the GTA area housing market conditions continued to improve in June, with sales growing quite strongly year over year, while new listings declined over the same period. For the first half of 2026, sales have also edged higher compared to the first 6 months of 2025, with new listings down substantially. It says here, while the average selling price was still down year over year in June, the annual rate of decline has receded over the past few months. If market conditions continue to tighten in the second half of 2026, selling prices could move in line with 2025 and eventually post some increases. This would give an increasing number of households the confidence to move back into the marketplace. Do you agree with that assessment?
No, that is just real estate propaganda.
Okay.
When what we're talking about here is a increase in. I told everybody that there'd be more units sold this year than last year. I told everybody that in January or February, because we're going to go from 32-year lows in sales in 2025 to 15 or 12-year lows in sales in 2026. But for the real estate industry to suggest that that's some kind of buoyancy or some kind of happy days are here again is absolutely crazy. I mean, we're all year long, we're going to be below 10-year averages the entire year. So how anybody can say that this represents a real big turnaround, it's just the cheerful chatter of real estate agents. That's all it is.
Basically, what you're saying is into the end of this year and perhaps into 2027, it will continue to be further pressure on home prices, basically a buyer's market.
There is no question that pressure on home prices will continue throughout Ontario and British Columbia through the whole of this year and into next year, and that the best outcome in 27 would be it just stops falling and stays flat. The idea of an immediate rebound is not sensible to me. I just don't see it.
If somebody were in the market to buy a home and you had to advise them on a timeline given your outlook, what would you tell them or her?
I'd say still be patient, particularly in British Columbia. There's actually more runway to fall in British Columbia. But in Ontario, I'd say start getting serious in the fall. Start getting serious in October, November, and take a look at what's in the marketplace if it suits your budget. But this is the idea that there's going to be a rebound in home prices in Ontario in 2026, I think it's a significant error.
Are you seeing a lot of for sale signs in your area right now?
Yep.
Pop up.
So the graph looks like a hockey stick. Now it's really important to understand the base numbers. We had the lowest base numbers of foreclosures and power of sales in Canada for the last 3 years than in the history of the country. It's never had that. It's never been this low. Now we are up to what is probably historic numbers. Right now we've soared from a very low number to what would be a historic average. But I suspect because this trend is just going straight up in a hockey stick fashion, it'll start to slow down, but it will continue going up. We will see continued foreclosures and power of sales in residential real estate in Ontario and British Columbia. They will continue, they will grow throughout this year.
Someone's looking to sell their home. Doesn't matter if it's, well, let's say a single family home for the sake of argument in British Columbia or Toronto. There's no definite timeline here. They're not in a rush to raise cash. Would you advise them to wait for a market rebound or execute as soon as possible?
Well, if they're waiting for a market rebound, they better plan on waiting for 18 months. And again, that could be longer. It could just stay flat for a number of years. So my advice to somebody who feels they should sell is to go ahead and sell. If you have a reason to move on to another type of housing, or you're of an age that you want to make a change, just go ahead. The idea of hanging around for 3 or 6 months and seeing a better result is not realistic, and it has been proven to be this way for the last year. Everybody expected a turnaround for the last 12 months, and prices have just gone down. That's it.
Mm-hmm. Yeah. What indicators or signals do you need to see that would convince you that the market is rebounding upwards?
Well, the first thing we need to see is that there is a return to positive population growth in both British Columbia and Ontario. The negative population continues. The people leaving the province, both provinces, continues. We're going to see that trend continue for the next little while. And I think that's a really difficult scenario, to have a shrinking population and expect real estate to make a big rebound. That would be the first thing I would watch for, is for the Canadian federal government to actively restart new people coming to Canada.
How would you describe Canada's population trend to somebody not living in Canada? If you had to explain why Canada is, for the first time in its history, experiencing population declines for the second year in a row now, what would that answer be?
Sure. We had a Prime Minister, Justin Trudeau, who was the most ridiculous individual on most policies you could ever imagine. They decided to increase population growth to the point where in the course of 3 years, they brought in 3.2 million people, which would be the same as the United States having legal immigration of 30 million people, which of course, if that ever could possibly happen, there would be rioting in the streets. But we didn't have it in Canada. They just came. And as soon as everybody figured out that this was an unparalleled disaster, that none of our systems our rents went through the roof, our healthcare was damaged. It was just an incredible disaster. And at the point they decided to correct, a new government came in under Mark Carney. The decision was made there would be absolutely no new people come to Canada. And a number of the people who came in during the $3 million person influx decided, wow, there's no jobs for me and they won't give me a permanent residence card. I'm leaving. So we're in the midst of that process of having a large number of those 3 million people over 3 years saying, I'm not going to stay, I'm leaving.
Overall, if you had to assess what Canadians really need, would you say that the housing correction that we're experiencing now in the large metropolitan areas would be a good or bad thing? Meaning, would it be good for the economy in terms of promoting affordability, or would it be destabilizing for the economy? Keep in mind that the governments and the people have wanted more affordable housing for a long time, and now it looks like the markets are finally waking up to what's a fair value, besides the fact that the governments are putting a backstop to a certain subset of the real estate sector, but that's beside the point.
It is unquestionably and inescapably good for the Canadian economy to have substantially lower house prices. There's no set of circumstances that anybody would say it's bad, except for, unfortunately, for construction workers who are out of jobs. And I feel for those people. They're just hardworking people who did well, and then the market turned on them. But there's nobody in government, nobody in finance, nobody who looks at economics would say that it was a good idea to have some of the most expensive housing in the world in a country with the largest landmass in the world, like second largest landmass. Like it makes no sense. It's nuts. So yes, it's a general positive, particularly for young people. We're in a country where 30 years ago, the average first-time home buyer was 27, and today they're 40. I mean, if that isn't a very, very awful stat, I don't know what is. It's just terrible.
Okay. Well, Ron, thank you very much for that outlook. I will go and convince people to go sell a home now if they haven't. Well, watch this video and watch Ron's work. He'll explain it in even more depth. Where can we go to follow you, Ron?
On YouTube, Angry Mortgage Podcast, on YouTube, and all over other social media at Ron Mortgage Guy. I am ubiquitous.
What other issues are you tracking right now? We haven't talked about what you expect from the Bank of Canada next week, by the way.
No
Just a
change.
short
No
note on that.
change.
Yeah, no change.
No chance of a change. No chance of a change for the rest of this year, unless inflation really, really takes off in Canada. Like there's no chance.
The markets are expecting the Fed to raise rates, though. Do you agree with the bond market in that probability? And if so, wouldn't the Canadians want to follow?
I think that I know that Mark Carney desperately does not want to raise rates. I know that his wishes. I know that Tiff Macklin doesn't want to raise rates. I know that everybody in the position of government in Canada does not want to see rates go up, and at the central bank. Yes, Kevin Warsh could make that decision necessary, but believe me, the Canadians are going to hold off as long as they possibly can. If the U.S. increases, it's just something that this economy is far too weak to start having increases in the Bank of Canada rate.
There was two, by the way, we didn't talk about this, but let's just touch on this real quick before we close off. There were 2 quarters of consecutive negative GDP. The government didn't want to call it a recession. In your view, are we in a recession?
I think we're in a profound economic malaise. It's hard to call it a recession if the government of Canada is committed to spending astronomical amounts of money on pipelines, submarines, jets. This rearmament play is a real thing. And if governments are going to spend hundreds and hundreds of billions of dollars on energy development and rearmament, I don't know if there'll be a recession, because it is classic Keynesian interference. So I can't give you that answer. But I will tell you that manufacturing jobs keep leaking out of Canada, and construction jobs continue to feel the pressure.
Okay, let's follow up more on the Canadian economy. Let's see where rates head and how the economy withstands the current monetary policies of the central bank. Good to see you again, Ron. Please do follow Ron Butler in the links down below. I'll put the links down below to follow the Angry Mortgage podcast. Welcome back, Ron. Good to see you again.
Great talking to you, David. I always appreciate it.
That's all for today. Thanks for watching. And please do subscribe and like this video. Please do subscribe and follow Ron in the link down below. And please do use my code LIN, L-I-N, when you sign up to Kalshi. Remember, new users who use my code LIN, L-I-N, can get $10 when you sign up and trade with $10. Link down below, or scan the QR code here, and my code is LIN, L-I-N.